Hey there, home sellers, home buyers, and investors. Today I've got some big news from north of the border. The Bank of Canada just cut its benchmark interest rate by 25 basis points to 2.75% on March 12, 2025. This is the 7th consecutive rate cut and the lowest level since September 2022. So why did the BOC make this move? The main reason is the escalating trade conflict with the U.S. Governor Tiff Macklem called this a new crisis and warned that the economic impact could be severe. The constant uncertainty from U.S. tariff threats is really shaking up business and consumer confidence in Canada. Now, despite showing signs of strength at the beginning of 2025, the trade war is casting a long shadow over the Canadian economy. The BOC conducted a survey between January 29th and February 28th, and the results are concerning. Businesses expect higher prices, weaker sales, reduced investment, and overall cautious spending. Governor Macklem pointed out that although Canada ended 2024 on solid economic footing, this new crisis poses significant challenges. Senior Deputy Governor Carolyn Rogers also noted a sharp negative turn in Canadian sentiment. The BOC's official statement made it clear, monetary policy alone can't offset the impacts of a trade war. They will carefully assess inflation pressures from both higher costs and weaker demand, closely monitoring inflation expectations. So what does this mean for the future of interest rates in Canada? Analysts have different views. Desjardins' Royce Mendez believes future cuts will depend on inflation expectations. BMO's Douglas Porter anticipates 3 more cuts, potentially bringing the rate to 2%. CIBC's Avery Schenfeld expects 2 more cuts, possibly reaching 2.25%, which could be the bottom if tariffs are removed. Lower rates could reduce borrowing costs for variable rate mortgages and other loans, giving some relief to households and businesses. However, the trade war's uncertainty looms large. The Canadian dollar slightly strengthened, and government bond yields dropped following the rate cut. In conclusion, the BOC's rate cut is a proactive measure in response to U.S. tariff turmoil, aiming to cushion the Canadian economy from the severe impacts of the trade war. As home sellers, home buyers, and investors, we need to keep a close eye on how these developments unfold and adjust our strategies accordingly. Stay informed and stay ahead. If you found this video helpful, smash that like button, share it with fellow home sellers, home buyers, and investors, and don't forget to subscribe for more updates. Thanks for watching, and I'll catch you in the next one.